Hey guys, welcome to Bulls versus Bears weekly forex forecast. My name's Dr. Greg McLeod, and this is where we go looking at what's going to happen in the markets this week in the forex market. With the big events going on, how the big question is, how is the Fed rate decision going to impact the markets? Are they going to cut 25 basis points, or are they going to cut 50, or they're not going to cut it at all? The market's be waiting with bated breath to see what's going to happen because that impacts the dollar, impacts the euro, impacts the stock market. We'll take a look at the stock market as well. We'll take a look at the Nasdaq, the S&P 500, as well as the Russell 2000, and see as they kind of their momentum's kind of slowing down ahead of a holiday. Remember, we're a week outside of Christmas holiday, and we'll see if those will they fall and there's some profit taking just before the holidays. Also, we're going to take a quick snapshot look at the U.S. dollar index. The dollar index is the reserve currency of the world, and you need dollars to buy stocks. You need dollars to buy currencies, and but the dollar is rising, and we'll see why that rise continue into 2025. Okay, so again, let's go ahead with Bulls versus Bears, the weekly forex forecast, and I'm going to share my screen now. Okay. Ba-ba-ba-ba-ba. Sharing the screen. Sharing this. No, no, no. Okay. There we go. Share. Hmm. All right. We're going to. All right. All right. All right. Here we go. This is the Bulls versus Bears weekly forex forecast. And we line up our screen so we can see what's going on, move stuff out of the way, and uh, get Bulls versus Bears. I'm going to direct your attention to the risk disclosure on your screen to make sure you understand all the risks associated with foreign exchange trading. Okay. And I am the CEO and founder of the Elite Traders University. My mission is to help men succeed in trading to make it their full-time career, working just 2 hours a week, 90 days. That's all I ask to help you become a profitable, proficient trader. And so that's what we do here at Elite Traders University. Okay. And great. And remember, we have the Gold Rush Blueprint, always, that's on sale right now. So my book on how to trade gold. I have three powerful systems within that book as well, and so excited about my that's my second book, and really excited about it because people have tremendous results applying it to gold and other markets as well. The commodities markets as a powerful system. Go to bit.ly/Gold Rush Blueprint to find out more. Okay, that's our agenda. Let's get on to it. We're going to use my favorite tool, the MyMark heat map, as the arrangement of currency pairs with percentage change. It tells us what's hopping, what's popping, what's dropping, what's not in the market. And let's go ahead and pop that in there. Okay, and here we go. So, and it's a very simple tool, but it's also a suite of tools as well. The main tool, the heat map, tells us what's hopping, what's popping, what's dropping in the market. By green is trending up, red is trending down, and gray stay away. It means things are moving sideways. And this way, we get a look at the entire market, the entire the currency market in one snapshot picture, as opposed to going through hundreds of charts and hundreds of time frames. This is a powerful, powerful tool. Okay. Now you can come to the page, mymarketheatmap.com, and access one of those six powerful heat maps. We have heat maps for commodities, for indices, for stocks, and for forex. Um, but we will put the forex majors here that you can have access to right now. And actually, we can see that the dollar yen is up 0.68%, trending up. Also, the euro is trending up as well, and the pound is also trending down, while the other majors are moving sideways. Okay, but also what we're going to be looking at right now is the free, where you have to kickstart it. Sometimes you got to refresh it, and when you refresh it and click Show More, we'll get the economic calendar. And what I do with the economic calendar is I go to Filter, and I just use the high impact items and uncheck these others because I'll get a bunch of these other countries, which are wonderful places to visit, but I don't necessarily care about their economics. Okay. So here we go. This is what's going on. We're going to start with the economic news because the economic news provides the backdrop, the main driver for currencies. So it's very important to not just trade with your head stuck in the sand and ignore what's going on in the economics, because the economics form think of a stage or a play or a movie. You have the background, the backdrop, and then you have the actors and the players on the front. Well, the economics are the backdrop. If it's a stormy backdrop, you're going to need an umbrella, right? If it's a hot backdrop, you're going to need shade or a cold drink, right? So that the environment that the market is going on that's the economic calendar. So Sunday we have Chinese retail sales year on year expected to drop from 4.8% to 4.6. We have industrial production year on year off China saying the same. You probably say, well, great, why do we care about China? China is the largest trading partner for Australia and New Zealand, and we do trade the Australian and New Zealand dollar. When China's economy catches a cold, well, then, Australia and New Zealand will catch the flu, right? It'll be lots more serious. So we can trade those as proxy currencies for China. Okay. Monday, we have some French data. Look at the flags. I call this fund with flags. Fund with flags, right? We make money like, so we're looking at the flag of the currency, and we see that's France, and this is the Eurozone, and they're looking at the HCOB services PMI flash, and the previous number is 46.9. We're looking for a drop to 46.4. Remember, France is in a lot of trouble. They have their government is has kind of fallen apart. The coalition is falling apart, and so that's also impacting the economics there as well. And we have the manufacturing PMI as well. And what I'm just looking at is I'm going to be trading the euro for that Monday. You'll probably see me place a lot of trades euro because you're going to have French European data and German European data as well. Europe, the euro is the anti-dollar, and since the dollar is reserve currency of the world, and the dollar has been strengthening, it seems like an obvious choice to be shorting the euro. But we'll look technically to verify that. But we can look and see that there is some support for the dollar going higher against the euro because they are negatively correlated, and negatively correlated means that when one goes up, the other goes down. Right? When the euro goes up, the dollar goes down, and when the dollar goes down, the euro goes up. So here we go. That's several hours away from here. We also have German flash PMI 49.3 dropping to 49.2, and the manufacturing PMI flash is slightly higher, 43.3 to 43.8. Okay, so that's going to be at 3:30 a.m. Eastern time. So if you're trading the London Open, 3 o'clock Eastern time is when that's happening. You probably say, "Great, I don't get up that early." That's fine. But I'm on the Pacific time, so it's like midnight for me. So if you're in the Pacific time zone or Mountain time zone, it's probably a little bit easier to trade the London Open because it's like midnight. It's like watching a late movie, right? 8:30 a.m. I'm going to be asleep because it's going to be 5 o'clock, 5:30 my time, and I'm not going to be up for this. But I might have trades automatically entering and exiting using my new money machine method here. But I'll tell you more about that at the end. But we have the American flag, all right? USA, USA, USA. We have New York Empire State Manufacturing Index, and it's supposed to drop precipitously. This is a huge drop, guys. 31.2 to 6.4. Kind of interesting, right? That we have this kind of drop. Don't know if that's like a technical. I mean, the difference between, you don't need to know exactly what's happening with this. You just know that this is a huge miss, and so they'll see how that has an impact at 8:30 a.m. Eastern time. At 9:45, we're gonna have the S&P Global Services PMI supposed to drop from 56.1 to 55.7. Global Composite PMI flash is supposed to also drop from 54.9 to 54.4. And the S&P Global Manufacturing PMI flash is supposed to actually drop from 49.7 to 49.4. So they're all kind of sloping down. It's a Monday. And so maybe we might see the dollar maybe drop on a Monday and then pop back. We have turnaround Tuesday. We call it Manic Monday, turnaround Tuesday, wow Wednesday, fabulous Thursday, and Friday, Freaky Friday, where everything goes the opposite direction, right? On low volume. And Monday's usually a low volume day. So I usually don't take, if you see the stock market selling off on a Monday, it's actually a good thing because you'll have turnaround Tuesday, right? So let's go ahead and look at Tuesday. Turnaround Tuesday, we have a lot of UK data. We have claimant count change. That's their word for unemployment, right? And it's supposed to actually, or the claimant count is supposed to drop from, or rise from 26.7 thousand to 28.2 thousand. And unemployment rate is supposed to remain steady at 4.3%. And so I'm looking at the flag, not necessarily trying to predict which way the currency is going to go based on the data. I'm looking at that this is going to provide volatility. Volatility is food for traders. It's what feed us volatility. Don't want to feed us too much. We will get overstuffed, and have a bellyache and go to a food coma with too much volatility. But you need just enough to keep things moving, right? And so news provides volatility. So I don't trade right at the announcement, but I have a news feed strategy where I can actually get in the market maybe 30 minutes to an hour afterwards, and that's is going to still provide some really good trading opportunities. 4 a.m. we're going to have German IFO business climate supposed to drop from 85.7 to 85.6. So that's the euro. We'll be trading that, and ZEW economic sentiment supposed to drop from 7.4 to 7. Okay. And so that ends it for Tuesday. Good stuff there on Tuesday at 5 a.m. But 8:30, that's when we start the U.S. news cycle. Starts at 8:30, and they have another cycle at 10 a.m. Sometimes they have news at 10 a.m. and sometimes they don't. 8:30 a.m. We're looking at U.S. retail sales month on month. Retail sales, since 82% of our GDP, of gross domestic product, is consumerism. It's people buying stuff. So when we see retail sales, it's a big part of our economy. And we see it rising from 0.4% to 0.5%. Right? And also we see retail sales year on year. It's supposed to rise from 2.8% to 3.8%. So we're seeing is this rise. These are backward looking. So this is for November's numbers, and this is December. So we look back a month before, right? So this could be very powerful for the U.S. dollar moving forward. Especially after the bad New York Empire State Manufacturing Index projection, right? And we don't. It's still, remember, these are all projections. They haven't happened yet, but this is what the market is pricing in. And the market is a discounting mechanism, which means they have already assumptions. They have whisper numbers. They got guys on the inside. They already know this stuff already, or they think they know the stuff. But when they are surprised, which sometimes they are, when they are surprised, the market has to adjust. And that adjustment provides extra volatility in the market, right? All right, so now we got the maple leaves. Lots of maple leaves, lots of Canadian, so lots of Canada data. Canada probably one of the receivers of the Trump tariff increases. We look at median CPI, the consumer price index year on year dropped from 2.5 to 2.4. The CPI trim mean year on year dropped from 2.6 to 2.5. Inflation rate year on year is supposed to rise from 2% to 2.2. Core inflation rate year on year, that's core inflation, is X food and energy, remove food and energy. I don't know who doesn't use food and energy, but it's supposed to remain unchanged. And inflation rate month on month is supposed to drop from 0.4 to 0%, which is this is what their central bank is trying to get inflation down. Core inflation rate month on month 0.4%. As with the previous number, forecast call for 0.4, unchanged. And then we're going to move right into some a little bit of Aussie data. So if you're trading during the Asia session, the Australian dollar and the Japanese yen are going to be in play. The consumer confidence is going to drop from 5.3 to 3.2. That might be a really good. That's another big, big 2% drop, which could be negative for the Australian dollar. And we'll look at the technicals. As the dollar increases or rises, we're going to see the Australian dollar do just the go in the opposite direction. It too is an anti-dollar as well. Balance of trade, Japanese balance of trade supposed to actually, wow, the negative 46.1, it's supposed to actually drop to 688.9. Okay, there's a minus sign in front. Bigger the number, the less the balance of trade is, right? So core inflation rate month on month. So for that, we've been seeing the yen actually rise during the Christmas season, which is something very, very something. It's like a canary in the coal mine. They took canaries to a coal mine because they didn't have like, you know, carbon monoxide detectors, right? They had this little bird in a cage, and if the bird dies, that's a signal that we need to get out of here because a bunch of poison gas, and it's concentrated enough to kill the bird. Eventually will kill us. So the canary in the coal. If you heard the term canary in the coal mine, and there was like a song by I think by the police, the canary in the coal mine. Okay, well, the Japanese yen is a canary in a coal mine. If the yen is increasing when we're in the Christmas holiday, the big export season, it usually means that the smart money is bailing on the indexes. They're bailing on the markets. We have a massive triple witching coming up this week, right? We're gonna have index options and all expiring all at the same time, which provides additional volatility. We're going to a holiday. There's a lot of things. You got the longer term interest rates are high and the dollar is rising. So usually that's a sign that we're on the verge of something bad. Okay, so I would be very cautious this week. I mean, see, as pip and runners, as short-term day traders, scalpers, we use forex scalping to compound profits quickly, and we get out of the market and then we're flat. So right now I'm flat. I did 2,300%. I had 40, 50 something trades, 55 trades, and with three losses last week, and I'm flat. I'm not holding anything over the weekend. I get in and I'm flat because as we get closer and closer to significant resistance levels, and we get closer to the end of the year, anything can happen. Change of administration. We had our honeymoon. We've had everything is great, but then these people who made all this money have to take profit. And when they take profit, we look at prices coming back. We look at as people start selling, things start to fall. Not because they're bad, it's just that they're taking profit. So you don't want to be the person left holding the bag, right? There's a story about the guys that, and maybe you're builders out there, and correct me if I'm wrong. The builders, phase one, they're building, phase two, and then the phase two people say, hey, you want to start phase three, right? And they sell everything to the next guy, and then they go to Tahiti, right? And what happens? Phase three fails. Nobody's buying, right? Not that third phase. You got houses unfinished. You've got the guys sacked with all this debt and no buyers, right? Because because the phase one and phase two people made money, right? So it's like in the market. You don't want to be the last. It's like musical chairs. You don't want to be the last one without a chair. So you just be very careful. You're like, oh, I've got money now. I want to invest. It's like, yeah, you should have invested like 6 months ago. Now we're coming to the end of the year, and then you're trying to come late, Johnny come lately, right? So be careful, right? So we got lots of the yen is something to watch. Dollar yen, Aussie yen, Kiwi yen, they're all seem to be pulling back. Um, Pound, lots of UK news on Wednesday with core inflation rate. They used to have Super Thursday, which I thought was pretty cool, but now they moved everything to Wednesday. Core inflation rate month on month. Inflation is supposed to drop from 0.4 to negative 0.2. Inflation rate year on year actually rises 2.3 to 2.5. And then inflation rate month on month is supposed to drop from 0.6 to negative 0.2. And core inflation rate year on year rising from 3.3 to 3.6. So that's going to be very interesting for the Bank of England. This got mixed bag, but all we care about is that this is the Union Jack flag. It's the flag of Great Britain. And this on Wednesday is around 2 a.m. is going to be very active, and it's going to provide us the volatility that we need in the market, right? So if you want to go, oh, I want to go trade Aussie Kiwi. Okay, yeah, you can go ahead and do that. It's great, but that's not where the action is going to be. And if you lose money in that trade, I'm not going to laugh at you. I'm just going to say, why'd you do that for? It was my favorite pair. It's like the market doesn't care if you're favorite. They're looking at the economic calendar. The economic calendar drives flows. It drives what's being active in the market, right? So they're telling you what they're going to trade, right? Um, Here's the euro, 5 a.m. We have inflation rate month on month. We also have core inflation rate. Inflation is supposed to drop from 0.3, negative 0.3, 2.7 on the year-on-year final, right? Unchanged. CPI final supposed to drop from 127.03 to 126.67. And inflation rate in the Eurozone final rise of 2% to 2.3. Okay, so again, the euro is going to be very active around 5 a.m. And then we're going to close out that Wednesday is going to have the FOMC, the interest rate announcement. And this is the big thing, people. The market's predicting, or what they're saying, the analysts are saying that the interest rate is going to drop from 4.75 to 4.5%. So even though the Fed is cutting, the dollar is rising, which is, interesting. And also the 10-year Treasury note is rising. We got a four handle on the 10-year. So the 10-year is not budging on this. And we have a tool that actually says that if you go over to the CME, they actually have a tool that actually tells you that there's like a 95% chance of a quarter point cut, right? So what we want to hear from the announcement, it's probably going to really freak everyone out if they don't. The market is expecting more cuts, and they may not get more cuts, right? So rate probability. This is in the CME Fed. It's called a Fed Watch tool on the CME.gov, and you can see there's a 95.3% chance of a quarter point interest rate. So it's huge, right? However, and there's like 4.7% chance of a 50 basis point cut, right? So it's all baked in that we're going to have it. What they say afterwards is going to be very important. If Jerome Powell afterwards says that we might not have any cuts for, or wait and see, well, then that probably will shoot the dollar a lot higher and probably take down the NASDAQ and take down the S&P. A lot of those companies, those big tech companies, rely on low interest rates to fund their projects. New companies coming on, they have a lot of burn rate and they're constantly borrowing money. Higher interest rates in the long term, they're not getting any more cuts, could stifle growth. Okay. So we have a press conference after that. Then we have Kiwi GDP growth rate that comes out. And I don't like trading any of this, that close to the 5 p.m. So I kind of like ignore these. But we do have a Bank of Japan interest rate decision. And there's they're going to keep rates unchanged at 25 basis points, right? They're not going to change anything. They're not going to rock the boat. GFK consumer confidence supposed to drop from negative 23.3, actually rise. Sorry, you got a negative number. We're actually getting a rise here. Again, Europe, the flag is there, and lots of UK. Here's our Super Thursday. This is the Bank of England. We're going to have a Bank of England interest rate announcement, and Wiley, they're going to keep rates unchanged at 4.75. There are 9 members of the MPC, and they have like a scorecard, like how many people are going to vote for a unchanged 7, and they believe that the 0 will vote for a hike and 2 will vote for a cut. And so that's how, so 7 to 0 to 2, right? No hikes, 7 unchanged, and 2 voting for a cut. And then you're going to have minutes and the interest rate decision that comes out, and that's going to be at 7 a.m. Eastern time on December 19th. That's going to be very, very exciting for the pound dollar, pound yen. If you are a pound trader, Thursday is going to be fantastic. 8:30, we're going to have lots of U.S. data. We got core PCE, an item or an indicator that the Fed actually watches. That is a core PCE going to drop from 2.8 to 2.1, which is really what the Fed's looking for. It's an inflation number. 3% growth. The GDP growth rate quarter on quarter is supposed to drop from 3% to 2.8. GDP price index quarter on quarter, 2.5 to 1.9, right? Initial jobless claims as well. So in this case, I would look at trading dollar CAD. Dollar CAD has been on a tear. dollar CAD, and I will look at definitely look at the euro, right? And then you have Japanese inflation supposed to rise from 2.3 to 2.5, right? And our current Japanese currencies will be on be the focus. Then finally, we'll wrap things up with more UK data. The pound retail sales year on year supposed to drop from 2.4 to 1.9. Retail sales month on month actually rise, right? Personal spending in the US 830. We're going to have that rising from 0.4 to 0.5. Personal income drops from 0.6 to 0.4. If that can have the money to, yeah, spending's up, but incomes are down. Not good mix there, right? Core PCE price index month on month dropped from 0.3 to 0.2. Another good reason why the Fed probably doesn't need to cut rates too much more. And the core PCE index year on year actually rises 2.8 to 2.9. Then you have the Michigan consumer sentiment final, supposed to rise from 71.8 to 74, which is going to be good for the dollar. And then we have, and then that's it. That's it for this week. All right. So those are the economics. So, Greg, let's get to the technicals, please. Say, all right. But you've got this wonderful what's going on in the markets going into the new year. It's always exciting. It's always provides what's the theme, the big theme. What are the big themes? Right, the big theme is going to be tariffs. The big theme is going to be interest rates. The big theme is also going to be a reignition of inflation. Right? Will inflation come to rear its ugly head? Historically, we have seen that happen before, where we've actually had the analog that we look at is always going back to 1980, right? We had a president that was was not very popular, Jimmy Carter. We went from Jimmy Carter to Ronald Reagan, and so we had the Reagan Revolution. So very simple. It's almost like we're in this I know Groundhog Day, where things are kind of like repeating themselves. It's like, didn't we do this before? Except that it looks like we've engineered a soft landing, but I'm actually going to start the TNX. The TNX is the 10-year Treasury note. TNX is a symbol. It's a CBOE 10-year Treasury note, and I'm going to get rid of. I'm going to go to our single screen method here, and we're going to go to a daily. We can go to weekly chart. And you can see that the interest rates have been since the lows of COVID, ever since we had near zero interest rates, we have rallied up from interest rates were on their way down, and now they have been going up, right? And then lately we had a little bit of a pullback, right? We had this pullback. The pullback in Elliott wave terms looks like an ABC completion against the primary trend. The primary trend is up. Again, this is the 10-year Treasury note. And usually interest rates go up to fight inflation. So if they think inflation is going to go up, the bond market actually controls everything. In fact, my neighbor in Houston, Texas, her house was right behind mine, just like one of those like Tim Allen and Home Improvement. Over the fence was I'm the guy over the fence, and she's over the fence too, watering her lawn. And like, bond traders, what you doing now? We're gonna control the world. It's like, oh yeah, the forex people are pretty smart, So we go back and forth, And our daughters wound up going to the same university, which is pretty wild to have Charlisa and Alexa. They're both going to the same college and we're neighbors, bond trader to forex trader right next door. It's like wild stuff, but this controls, the bond market controls the entire market. All right. The bond traders, they're the tail that wags the dog. And so as we see, we had spiking interest rates, we usually see a down move in, everything borrows money. We borrow money. Companies borrow money. And when that price of capital goes higher, it makes businesses kind of hard to continue, right? So we are looking at this pullback here. We got down to a low of 3.58. and everyone's celebrating, inflation is over. And now we get this rise, a pullback, an up move, a wave one, a wave two, and we can see a three-wave move back up, back to 5%. And that would mean that inflation is coming back, because this is kind of like an inflation gauge, right? You can actually see that this pullback and this extension. And if you mount the US dollar, if you take a look at the dollar, right? This is the weekly chart. Daily chart, you can see we're just off the 200 simple moving average, right? And so this is basically people are, this interest rate is showing that they're anticipating inflation. They're anticipating lots of inflation. So let's go to the dollar index, and we see the dollar index looks just, similarly. If you look at the weekly, this is the US dollar, and we can see same movement. Why? Because interest rates make the dollar more valuable, right? They become collateral. And look at this nice double bottom here and a rally. And usually and then price came back to test the double bottom, the top of this double bottom, the range, right? So price came back and didn't get right at the range. I guess you could move this up a little bit. And we basically came back and double tapped, right? Double bottom. And now when we've broken above this bottom here, and so now we're looking at the dollar moving up. We have an uptrend, higher highs and higher lows. The primary trend is still up, and it's basically gotten more steep, right? Gotten more aggressive. So we're looking for a move. We're currently up to 107.15, and this thing not too long ago we were at like 105, and we've really moved very fast, very very far, very fast. You look at this daily, it's just a rocket from the 103, and then here, right? And so we break 108, then we have all this empty space back to 114. And what does that mean? It usually means that that anything versus the dollar, like if you look at the euro dollars, is the anti-dollar. Now keep this in mind. We broke out, pulled back, and then we could fill this gap. We have this gap straight down over here back in October. We dropped straight down, and we have a similar move straight up. I'm trying to give me a shape here. Yeah, this rectangular, this is a vertical kind of move there, and usually gaps are filled. It's the rule of symmetry. We can have a similar fill on the other side with an aggressive move here. All right. Trying to get this scrap. All right. So that would be that would just destroy any of these other currency pairs, such as the pound. Let's look at the anti-dollar, let's look at the euro, right? Look at the euro and look at a weekly. And you can see on this weekly chart, we adjust it so we can see it. We have just been moving down for a very long time. It's 2007. It's like just the dominant trend has been down, right? With some, the bulls have staged some rallies, but those rallies top out, it's severe runoff, right? And so here's our double top, almost a triple top here, and we've rallied up to a high of around the 112, and now we're making our way down. We broke some support areas, and so if we understand the dollar is going to, all this is the US dollar turned upside down, right? So we're just looking at prices to actually continue to drop and make this. I like using colors to reinforce what the move is, downward move, right? And so we've been hanging around this 104, 105 area, and we pierced it, and prices rebounded back into the range. But we're waiting for the FOMC, right? And the FOMC could give us our clue that this will continue its very, very sharp move. We had a sharp a sharp move to the upside here. Again, same, it's the mirror action move, the mirror symmetry move, where it was a sharp rise. We can see a sharp drop back down into the 98 area, right? And we have the symmetry. This is like the Valentine's heart that you made when you were a kid, right? And you didn't want to draw the whole heart, so your teacher would fold it in half and draw a little line, and then you unfold it. It's both sides, right? So this is the Valentine's heart, right? I love you, right? Unfold. So whatever happens on this side of the equation, we have a mirror action, the mirror reflection on the other side of the right. So all this up, we look for a similar symmetry move down, right? This makes it very extremely simple to trade this, right? This you just don't want to get in too early, but my bias bulls versus bears. I am bearish. I'm bearish the euro, right? All right, let's move on. We have lots of data coming out for the pound. Let's take a look at the pound. And I've got a short on right now. I'm actually holding a short. And I'm down a little bit on this short. But I'm looking for a retest of in fact, yeah, I don't think I can do anything now, but I'm looking for a move back down to 124.88. So I'm down about 44 pips on this baby. And so well, I'm still I'm looking for the trend line drop. And this is what happens when you are a short-term trader and your short-term trade occasionally turns into a long-term hold, right? So and we look down to maybe down to a 4-hour chart, right? Yeah. We still got a little bit of more to get, lots of red here. So let's see if we can in fact, it probably got short of a break here, rallied up, and then coming down, right? Right. So still looks very, I'd like to, if you're brand new to this, I would wait for some type of a rebound, back to retest this 126.60 area. Look, we want to sell strength in a downtrend, right? And so bulls versus bears, even though it looks bad, but we'll show you again when it comes back, right? Let's go ahead and look at the Kiwi dollar. And you can see it's just, with the weakness in China, we're seeing, look at this, just when the currencies trend, they trend very well. Lots of big trends, right? Huge, right? And then it becomes, it became more, it became more acute, right? Maybe a little bit of a rally, right? But then still that downtrend comes up for air a little bit. So we'd like for this to come up for some air, come up for a little bit, and look through. We've got a high of maybe 58.13. Look for a rebound, right? Because if you sell here, you can lose money. Price goes up, and then So you really want to. The safest place to sell is against previous resistance, right? You want to sell resistance in a downtrend, right? And so you want to see where you can see that where price rallied, that's where we've got very safe entries to get in, right? Okay, let's look at the dollar CAD, which is something I'm favoring for long, and you can see, well, yeah, I actually did. These are notes that I was talking to my students about, and I said I only take buys off the higher time frame, which is something I like doing. I'm gonna remove all 8 drawings, right? And you can see this is how strong this is. Why? Because the US dollar is strong. So it's very simple. You're looking for pullbacks against the trend because you can get long right here and it drops and you can lose money but going with the trend, right? You have to wait for that correction in that higher in this trend where it rolls over a little bit, gives us a little bit of an entry, gives us a Fibonacci or some type of a pullback where we can enter with a reduced amount of risk. Like if we come back toward 142.09, come back. There we go. Come back. Okay. Dollar CAD. Love to see this come back down and retest support and give us a nice double bottom entry, right? Like to see a pullback. Not that I'm looking for it to go short, though it might be weak on Monday. But that Tuesday, we get a bounce from the 42.10. I'm in it to win it. I'm looking for return to the old highs and beyond with this trend. We can see that it's done the same thing before, where price drops, rallies, moves sideways, drops again, makes a higher low, and then takes off. So again, rise, sideways, drop, and then, but the most pips you're getting are green. Notice that there are more green candles than red, right? If you zoom out, you can see that the lots of stacking red. Yeah, stacking green. There's more green than red, and these are Hakinashi candles, and so I'm a big fan of those. Okay, um, so and here's dollar yen. Dollar yen is a mixed bag. If you look at it's also moving right along. But if you look at the other yen pairs, they are not doing the same thing, right? So if let's look at for instance, let's look at AUD JPY, the Aussie yen, and you can see this is not this is a weekly, and you can see that it's dropped. It's making lower highs, right? We haven't made a lower low. That low is 90.04. But it really looks like it wants to roll over and like die. We have this head, shoulder, head, shoulder, and it looks like it wants to come down. Even though the primary trend is up, that's what makes it tricky. We have we have structurally higher highs and higher lows. We do have a lower low, not really, no, higher low. We have a higher high. We have a lower low. We have a lower high, but we don't have a lower low. In order for the bears to be a bearish move to be considered, we need price to get below 90.25. Right now, it's in a almost like a symmetrical triangle. Doesn't know where it wants to go. I wouldn't want to be but there is an argument to go by to be long, but this whole yen thing and this whole interest rate thing makes it a little murky for me. I would find something else to trade. Bulls versus bears based on structure and this price action. I'd be long this. I would look for a long opportunity, given that we have this long Pinocchio spike, still higher lows than the others. But we would need to get a break above 102.36, right? So anything that's a puzzle, which requires me a lot of thought, I'm going to pass because there's always an easier trade to find. This is not Sudoku. This is not crossword puzzles. If you want those type of challenges, go get a crossword puzzle, buy a book, right? There's a Sudoku book in the supermarket, right? But if you want to trade, you want to find those obvious, easy, stupid, easy trade setups. They do exist. You just have to be looking. You're looking for that chunk of gold. You're looking for that gold nugget. And so you might have to go through some charts if you don't have my market heat map. And you have to go through and search. And you gotta say, wow, this is wonky. I don't like it. I want to look at gold, right? And I look at gold and I see an uptrend. Again, I got this thing. I got a lower low, I have a lower high, a lower low, another lower high. I mean, a high, lower low, lower high. This looks bearish to me. This looks kind of clear, though I do have this primary trend that's like up like this. Structurally, I have a structure problem where this has made a lower low and this has made a lower high, has made a double top. It looks bearish to me. Early bear, right? So, bearish maybe back down to 24.54, right? In fact, if we use a Fibonacci on this, Fibonacci expansion, if we don't get any higher than 27.20, well, then I'm looking for a drop to 27.40, right, down to 23.11, right? Which would be, 27.40 probably be my limit there. And then my conservative target would be back to 25.69, which would give us a double bottom, will give us an ABC correction, which would be within the math of Elliott, right? Will be like that would be our target right there, 25.61 for gold, right? That would be and that's a pretty good target right there, right? Why the dollar's going up, and it's it's XAU versus USD, and the strength of the dollar combined with the rising interest rates are making it very difficult to hold gold, because gold has it doesn't pay any interest, right? There's a cost of carry, and so that usually is a drag on price if we don't have uh, you know other factors showing up. Okay. All right, so let's take a look at our indices. Let's take a look at the YM. Let's take a look at the Dow futures, right? And we can see, as I said before, I said we would probably hit a high, and we'll start pulling back. We still, structurally, we still have higher highs and higher lows, right? But how much is left in this party, right? But we are near support, right? We had, kind of a negative week, and we're sitting right at support, right? And usually when we tag a trend line like that, we get some type of a rebound, right? And so we've been dropping for so long, we might see a rebound from this area, and from this 43.80, 43.891. I'm going to take a fib from the high to the current low. We could go lower on Monday, but if this low does hold, we can get a bounce back up to 44.349, which is a 38% retracement. I usually make my 38% retracements very make them stand out with red. So, and we're hitting the 200 simple moving average on the 4-hour chart. Now we kind of broke through that. So maybe get a bounce, and and we might even go even higher, go back to these old highs here. But flat correction and then drop, consolidation, distribution, right? And we are sitting on a fib from this low that we had on November 19th. Take a fib from that low. We're on the mini Dow, and then move it up to here, and then that way you get a confluence of levels, right? So we are sitting. The 618 is 43,803. That's the 68%, 61.8% Fibbo pullback of this swing. So we have a confluence of Fibonacci and moving averages in this area, and I'd be bullish YM here, right? With this confluence there, right? I wouldn't short it. I'd be a buyer. Bulls versus bears, I'd be bullish YM. I'd be cautious around the 44, around this area here, right? Between the 44,325 and 44,501, right? I'd scalp, but those are my scalp targets. I would scalp up to here, and if we don't pass that area, then we could probably see a drop. Though I see a couple of green wicks there that could possibly be, 44,830. But right now, this would be a very low risk entry here, right? Where we could probably get a 1.6 to 1, right? If you get back to the 618, then that's a 3 to 1 risk reward on the YM. Okay. Look at ES, S&P 500 futures. You take a look at that. Switch over to that monthly chart, weekly chart. Inside day is usually kind of a bearish, small body candle inside a larger body candle. Again, these are Hakanashi. You can look at some other candles too, typical candlesticks. The momentum is definitely slowing a little bit, right? But I'm going to go back to my Hakanashi. Right. And this clearly tells me that there is some type of slowing going down. We can see small body candles, and we're flattening out. And we've got this, we still have an uptrend, guys. The structurally, we have a higher highs and higher lows. When we start seeing a lower high and a lower low, when we start breaking lows and then our highs are lower, but we're making higher highs and higher lows. This is still bullish, right? Still bullish. I wouldn't be shorting it. I no, in fact, I would look for a break north, right? And we're finding support right here at the 6,039, right? There's a double bottom right there. So we're bullish against the double bottom, and we can get back to 6110, right? I mean, that's just what I'm seeking. And then we're also, it's like a high and tight flag, right? At the 23% retracement, 6,048. We're sitting right there on this FIBO, right there, double bottom. So we should see a bullish move. ES should bounce and be moving higher, right? All right. And we get because that. And not Russia. I want the CME. There we go. There we go. Russell's selling off, sold off quite a bit. You look at the monthly chart, still, I mean, got a double top, which is, pretty ominous, right? We've got this double top to 2,465. Drop it down to weekly, and you can see you got this rejection up there, pullback. Trend is still up though, higher highs and higher lows. So this is a matter of just waiting for a turn to take advantage of a pullback, and we're hitting against the trend line. Drop it down to a daily chart, right? And we can see that we are coming back on the trend line here. Maybe dropped off 4 hour. And you can see the candles are getting tighter and smaller, right? And we're coming to some old support, and actually supports 2285, and we haven't hit that yet. We might have a little bit more to go. Before it's soup, right? We have a support coming here, and we're way up here. So, I mean, we've got this kind of like we are making lower highs and lower lows on this intermediate 4 hour trend, and it hasn't turned around. So we might see a little bit of a rise up to the 200 moving average, like 2371.90. Gives a nice double top for maybe a move down towards. So I'm kind of bearish the Russell. I'm looking for a continuation move. It doesn't seem like I want to slow down, and there's no there is this area here of support 2344 that is the high of November 19th, 2024, where we could get a bounce, right? Get so let me put that high in there as well, right? And so we did pierce it, and we did bounce, and we have an inside day, which is a bullish candle. So if this low holds, if 2337 low holds, well, then we can see a move back up here. So I take that back. I'm actually slightly bullish on the Russell, right? And let's look at our last. We'll look at last but not least is Bitcoin, BTCUSD, being that $100,000 mark, right? The great thing about you can use ETFs to access it. You can use spot. You can use a lot of different things. You can buy fragments of it, satoshis of it, and we can see new high. We're at the 104. 603. Actually, one of my students has been crushing it. It trades even on Saturdays and Sundays, which is pretty intense. We can see the pullback here. Let's go to a daily chart, and you can see we're just making higher highs and higher lows. And there's no historical previous, this is the highest it's ever been. So there is no historical data for resistance, support, and resistance. All we can basically do is maybe take Fibonacci expansions, but even those, the sky's the limit, right? Moving down to a 4-hour chart, we can see we're just making new highs after plummeting the 90 area. We're already at the 104.73. It was old resistance here. We did break above it, but with a wick, right? So that is our old resistance area. Price broke out. This, and we didn't really have a true correction, as I would say. So the correction usually comes back down to 9, it would go to 91. So what's going here? Do we have a fake out, kind of a bear trap or bull trap, where people buy the breakout at 104 and we take us back down to 91? That's possible, but that's really speculative, right? The trend is up, and but we didn't close above. We barely closed above the previous high. I don't know. It looks like a trap to me. It looks like a bull trap, and then we could come tumbling down back to 96,000, right? I'm not seeing any way into this 2-hour chart, 1-hour chart, 30-minute chart. I'm not seeing anything. I'm thinking that this is a fake move, but I said it was a fake move back at 5,000. Okay. So anyway, guys, I want to thank you so much for joining me for Bulls versus Bears weekly forex forecast. And if you have any questions or something you want me to cover, go ahead and ask me in the box below. If you need help with your trading, again, my dedication is to help men become better traders using my proprietary scalping approach to compound profits quickly, as opposed to buying and holding and waiting. Okay, so if that's something that interests you, go ahead and sign up for the free profit acceleration call. You can book it on my calendar, and we'll spend about 45 minutes to see how I can help you, show you how it works. If it makes sense to you, then we can move forward. If not, then you have some great information for moving forward on your own. Okay, talk to you later. Peace and pips. Cheers. Bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!